U.S. Federal Reserve Chairman Jerome Powell recently hinted at Dogecoin, saying that capital markets are frothy. Powell said recent internet-based cryptocurrency crazes, like the Dogecoin or Bitcoin boom in recent weeks, might provide a potential risk to financial stability for people, according to Yahoo Finance. Per CoinDesk, this is a direct reference to the Dogecoin and cryptocurrency spikes that have occurred in recent weeks. Powell's comments come as cryptocurrencies continue to rise in value. Dogecoin recently spiked in value again after Tesla CEO Elon Musk and Dallas Mavericks owner Mark Cuban tweeted about it to the public, according to CNBC. Cuban's tweet actually mattered a lot. He said that one of the problems of Dogecoin is that it can't be used to buy things. He suggested that the greatest inhibitor to its growth is that you can't spend the Doge you buy on Robinhood, Cuban tweeted. Robinhood CEO Vlad Tenev said the Robinhood app, which allows you to buy and sell cryptocurrency, may soon allow people to use their Dogecoin holdings. Mark Cuban decided to explain the importance of Dogecoin. Cuban said the Dallas Mavericks accept Dogecoin, which started as an internet meme in their team shop too, according to CoinDesk. But, overall, when someone brings up Dogecoin to you and asks you if it's a good investment, I wouldn't say it's the world's best investment, but it's a whole lot better than a lottery ticket. And it's a great way to learn and start understanding cryptocurrencies, Cuban said. Cuban's recent comments might be a good thing for Dogecoin owners, as his previous comments led to a spike in value, as I explained for the Deseret News. Cuban previously celebrated Dogecoin on Twitter. He said the cryptocurrency's biggest issue is not being able to withdraw any of your Dogecoin holdings from the Robinhood app. April 20 marked one of Dogecoin's worst days on record. Within hours, the coin had dropped from its open of around 40 cents to a close of 32 cents. By the end of the week, the meme coin had sunk below 20 cents, wiping out $25 billion of investor wealth. There was anxiety with larger investors who had big positions that the dog had its day coming and wanted to exit, said Eric Schiffer, the head of a private equity firm called the Patriarch Organization. Now, as investors try to make sense of an asset with zero intrinsic value, momentum investors will continue to confound traditional ones. As this week has shown, Dogecoin might be dead, but just not quite yet. Cryptocurrency's biggest inside joke has long confused conventional investors. All coins already have zero intrinsic value, and Dogecoin made a point to satirize that fact. Its original 2013 code awarded up to 1 billion coins per solved block, making Doge virtually unusable as a form of currency. Fast forward to 2021, however, and Doge has emerged as one of the most serious moneymakers of the year. $10,000 invested in Dogecoin at the start of the year would have turned to over $870,000 at its peak. Ordinary retail investors became overnight millionaires. Technologically, Dogecoin has also grown up. Its once ludicrous mining reward system now runs on a system that mimics a 2.5% inflation rate. A merged mining ability also allows miners to process Doge in parallel with Litecoin, significantly increasing its mining pool. Yet Dogecoin prices seem to have a life of their own. Its major technological overhauls in 2014 coincided with a huge collapse in value. 3 years later, the opposite was true. Though development virtually ceased in Q1 2017, Dogecoin prices would rise 3,700% by the end of that year. The explanation for these movements varies, from a failed Reddit investment scheme to a broader cryptocurrency mania. Recently, Doge price movements have become stranger still. On January 28, Tesla CEO Elon Musk tweeted the first of many posts referencing Dogecoin, a photoshopped issue of Dog magazine with Sins of the Whippet on the cover. Doge prices jumped 500% by the next day, creating a pattern of price rises following any mention by the new tweeter-in-chief. Dogecoin prices after Elon Musk tweet. Other celebrities have since jumped on board. In February, billionaire Mark Cuban told Forbes that he had bought Dogecoin for his son. "It's fun, it's exciting and educational for him," Cuban said during the interview. "It gives you a better chance of winning than a lottery ticket." That educational lesson might have earned investors billions. By mid-April, Dogecoin's prices rose so high that it briefly replaced XRP as the world's fourth largest currency. Dogecoin's celebrity effect has also coincided with a broader shift towards momentum investing, a byproduct of social media's role in promoting cryptocurrencies. Many coins now have dedicated fan bases who unwittingly create feedback loops in a coin's price. Rising prices draw more social media interest, which causes more buyers to join and so on. Momentum, however, is a double-edged sword. The same hot money investors are often the first to sell, creating an unrelenting downward spiral. That's why Dogecoin's 50% decline last week had investors concerned. Without intervention, the coin was surely set to fall further. Fortunately for Dogecoin holders, though, the coin's backers had other plans. As Elon Musk and fellow celebrities took to social media in support, Doge prices started to rise. By the time Musk tweeted the Dogefather at 2:20 a.m. on April 28, prices would hit 32 cents the following morning. So with Dogecoin, invest thoughtfully. It's no longer investors who are in control of the rocket ship. It's the famous backers who support the currency of this strange new world. Dogecoin has shot into the cryptocurrency top 10 in recent months and looks set to break back into the top 5 with its total market value currently just under $50 billion. Bitcoin, for comparison, now has a market capitalization of just over $1 trillion. Thank you for watching, everyone.
Dogecoin's even more bizarre in that respect. Listen,
but Mike, I don't mean to get too philosophical about it, but make the distinction, the differentiation in your mind, because between Dogecoin, right, and Bitcoin, and I know they're different. I know that Dogecoin effectively is a limited thing. It's supposed to be a joke, all of that. But there is something about what this is doing to the larger market, no?
Yeah, listen, all of this is happening because interest rates are zero. But you have to differentiate. Like, there's tens of billions of dollars of CapEx and OpEx put into the Bitcoin ecosystem every year, right? It's a well thought out, well distributed store of value that's lasted for 12 years and is growing in adoption. Where Dogecoin literally has two guys that own 30% of the entire supply. I'm not saying there aren't people that are passionate about it. There obviously are, right? I've been wrong about Doge. I've told people over and over that I would not be long it. That I think you're long it. You should take your money and kiss your girlfriend. But it's that same energy. Retail has the bit between its teeth in lots of ways. They're not giving up on GameStop. They're not giving up on Dogecoin right now. So dangerous to be short. Wouldn't be long.
Well, okay, what about Bitcoin at this point? It's now we're hovering in the mid 50s off of the highs after that Coinbase IPO, which really brought a lot of even more attention, seemed to bring a lot more interest. But then you saw a real pullback over the weekend, in part because of some tweets and some speculation about what the Treasury Department or the U.S. government might do, perhaps some other governments might do as well, but it has remained steady, or at least it's remaining at this point. Technically, what do you see happening right now?
So listen, I think we're going to consolidate for a while. Listen, there was a lot of great news, all got hyped up at once. And you have to remember, while Bitcoin is becoming an institutional asset, it's still primarily retail driven, and leverage got